Regardless of whoever wins in November, right, we are still talking about, the debt problem is not going away, right? And we're going to see continued record issuance of paper, which is potentially going to continue supporting yields and make the jobs exit path a lot harder.
You've just put your finger on the biggest long-term issue, I think, in the United States, which is debt and deficits. We have a debt held by the public over 100% of GDP. The Congressional Budget Office forecast, if you adjust for the tax policies of Biden or Trump, you're going to have deficits every year for the next decade of at least 6% of GDP. So effectively, starting in a better place than some peripheral Eurozone countries, but getting worse at a much faster pace. And I do worry that that's a key reason why the long end of the yield curve is not going to come down materially from current levels. So even if the Fed takes Fed funds rates down by 200 basis points over the next 2 years, I believe the 10-year yield is trapped between 4 and 5%. And may well have upside over 5% on a 2-year view because there's so much supply of treasuries coming to market.
So you're saying if we do reinvert the curve, that is, we're going to be reinverting for the wrong reason?
Perhaps, yes, with the long end staying higher and the short end coming down. Again, eases conditions for borrowers on floating rates. But for the federal government, I do think this debt problem is becoming more and more insurmountable.
Indeed.